Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Forsik from Elite Currency, and we got a lot to unpack in these final days of 2021. Another year, trading year behind us almost. This monthly candle and yearly candle, of course, coming soon to end. This month, very small volatility. You can see this monthly candle really tiny so far. That might not change that much actually in the last 10 days, 11 days. Typically, not much movement during the holidays. But yeah, if a candle like this closes bearish or below the 20 EMA, it is confirming, I think, the bearish kind of picture that we're looking at. It is one that could be a triangle, of course. We had a higher lower high. Now we might have a higher low another time as this maybe builds an ABCDE triangle pattern with the basically the triangle pattern looking to be probably bearish, to be honest, with the A, B, C, D, E, and then expecting a downward break. On the weekly chart, we see that last week was bearish. We have a fractal, though, after two inside, or not inside candles, but two dojis, and a pin bar before that. But ultimately, this is going sideways and making a consolidation below the 20 EMA, below the 144 EMA, and a dash down to WIS9, and a dash down to the 78.6 fib of this wave C swing, this being a wave D swing potentially, seems likely to 110 is also the 78.6 fib, and I'm expecting this movement to test that fib and perhaps bounce at the 78 or 88.6 fib back to the 21 EMA zone, and maybe further if it is a triangle pattern. If it's not a triangle pattern and there's a bear flag, it could break, of course, right away. In that case, the triangle pattern I mentioned earlier is not taking place, and there could be an immediate downtrend as well. All right, back to the weekly. So yeah, that's the space to the downside, as mentioned already in previous videos as well. So we have on the daily chart, we had a very strong momentum, of course, consolidation, strong momentum, now again consolidation. That consolidation is respecting the 20 EMA zone, just like it did here. There is no divergence pattern as far as I can see that is relevant for this time frame at least. And the downtrend still remains intact and very strong ever since April, really. At first there was a reversal, then breaking through the 144 EMA, retesting it, bouncing at it, and now fully emerged in this downtrend. So still expecting that follow through to the downside when it breaks through maybe these two fractals here, for instance. I would expect that as a continuation signal. Daily candle close below 112.30, 112.20 should signal downward continuation towards 110, and that's 78.6 fib. On a 4-hour chart, we see a lot of consolidation and basically zigzags. Last week, the 13th of December, let's see, we had a price move down, up, down, and up, then down, so a lot of consolidation. There's been 4 bounces at this support level, so it's not an easy level to break, but usually the more times the support level gets tested, eventually there tends to be a breakout, and I think that there could be a good chance of that happening. Now we had a wave 1, 2, 3, I think, so if we put the fib on this leg, as long as it stays below the 144 EMA and the 50 fib, or even the head and shoulders level here, potentially, it remains bearish in my view, and this could be a bouncing spot for downside continuation. A break below the 21 EMA and the support trend line could already be an early indication of the breakout on the higher time frame on the daily chart. So this could be the first breakout, the snap or swing down. Then we need a daily candle close below the level. There might be another bear flag on the hourly chart, and then the continuation lower. So I remain pretty bearish, as you can see. If it does move up, I don't expect it to move up too much, to be honest. And yeah, I think that if anything, we could put a fib on this swing, but 114.40 maybe, 115. But that would be, I think, levels that would act as resistance and should create some type of a bounce if price gets there. I don't think it will, but if it does, that would of course be a strong resistance. I do expect a reversal in this area. Okay, but I think a breakout is more likely considering the bearish engulfing, well, it's not engulfing twins, but this the clearly bearish candle that we had on Friday, closing below the 20 EMA after several retests of the 20 EMA zone. I think that this is looking like a pullback and breakout scenario to me, at least. All right, pound USD. Last week had a doji candle. This monthly candle is small as well, but yeah, it's clearly in a bearish momentum and downtrend when looking at the monthly candles, so that's pretty established. It looks like the 144 MA is now acting as a resistance after it broke, so it looks like a break, pullback, and continuation. There's plenty of space to the previous bottom. Now that we had a double top, break below the 20 MA, break below the 144 MA, it looks more likely that there will be a retest of the support, and that this bullish swing is over, and that we're creating a clear bearish swing at this moment. So plenty of space if we put the fib on that swing high, from swing low to swing high on that swing. 50 fib will be the next major level at 128.25. Of course, 130 round psychological level is also a level to be aware of. But it could go further to that. The 61.8 fib at 125, even the 78.6 fib at 120. I think those are targets that are serious targets on this weekly chart, at least, in the long run. On the daily chart, we had a clear momentum below the 20 MA. There was a pullback into the 20 MA and a rejection of the 21 MA. We had a lot of candles below the 20 MA. You look at these pink dots, indicating that more than 15 or 20 candles were below the 20 MA zone, indicating momentum to the downside, obviously. So, in my view, it looks like there's open space now to 130 and then 128.25 at this moment. Last week, there was a bit of volatility, a swing down, up, down. Then there was a stronger push up. And there was a clear rejection here as price went into these high, longer term moving averages. Clear rejection in that resistance zone. And yeah, there was, not surprising, there was a little bit of a falling wedge here. A little bit of a head and shoulders pattern, so it's not surprising that there was a bigger retracement, but that was it. It was just a retracement within the downtrend, and sellers stepped in and pushed this lower. So, yes, not surprising that there was some retracement here, I think, but after the retracement happened, downtrend continuation clearly occurred as well. So now, strong momentum. Testing the previous bottoms, I don't think that's a very good spot for short in my view because of the support that is taking place here. So I think some retracement on the hourly chart would be pleasant into the 21 EMA zone, maybe the 143 EMA zone. But one of those two areas should be a bouncing spot, and I suspect a downtrend continuation to take place. The breakout there could be interesting for a push lower down to 130. And I think that that is likely to happen. If we don't get a retracement, then we get an immediate push lower. I would look for an hourly retracement after that, a bear flag after the break, and then again a push down to 130. And I expect some reaction at 130, but maybe 50, 70 pips plus minus. But then again a downtrend continuation down to 128.25. So I'm pretty bearish as long as it breaks flag continuation or flag continuation, flag and break. I expect a downtrend to emerge and continue. Now the bulls, I don't think have much to offer at this point. It's too bearish in my view, and I don't really see any spot that would be interesting for upside, except maybe 130 as a bounce with a short kind of intention to just trade the bounce. Might make sense in my eyes. Otherwise, I don't really see any scenario that makes me bullish. Even if, maybe if price were to break above the 144 EMA here at 132.50, I mean, there might be some smaller play into the resistance. But that's pretty risky. And I think short-lived trade, don't think it could go too far, maybe 133.25, or if it breaks above 133.30, maybe a smaller trade into 135. But not that fond of those. I'm really trying to do my best and really trying to search hard for any bullish trades here, but I'm not big of fans of those. I think that looks too bearish. But you never know. Of course, I can keep that in mind, I guess, but those are risky trades, I think, and short targets. Whereas the downside, because of the nature of the trend, obviously it's quite strong. The downside targets are further away, in my view, and have more potential to succeed as well. That's just my 2 cents. That's my my vision at this moment. Looking at the charts, looking at the price action patterns, wave patterns, moving average, and fibs. That's my view. All right, so let's see if it plays out as I expect. But basically, a flag and breakout, or a break and flag and continuation is, I think, the best play. But time will tell. Of course, market might be slow, by the way. So a very serious option is that all these patterns play out later, or very slowly, because of the holidays. Price might make a break and then correct and stay in a correction for all of the holiday season. It could also easily go sideways until we reach the second week of January, or maybe 1 or 2 days there could be some action, some price movement, but the rest might go into consolidation. That could easily happen, that there could be a consolidation, 1 day of a break, consolidation, 1 day of a break, consolidation, and then we get the breakout in the second week of January, for instance, right? Because of the holidays, such a scenario could easily take place as well, and that's something I think that is important to emphasize. Holidays typically are slower, much slower, not always, but usually are. So something to maybe, instead of trading, just take some break and relax and enjoy the days off. That, this kind of type of this moment of the year is not a bad timing for that kind of break and relaxation, I guess. All right, or whatever you want to do, basically, away from the markets. All right. Anyhow, that's it for me. We'll be back next week. Wish everyone great trading, great holidays, great rest of the year. But anyhow, I'll still see you next week. So have a great week. Cheers. Bye-bye.